Bitcoin is deceptive. Some Bitcoin data is very deceptive. For example, the transactions on the Bitcoin network hitting all-time high after all-time high. Is there really more usage of the Bitcoin network happening? Are we really seeing continued growth in the adoption? Well, there is growth, but it's not in its usage. Bitcoin is not being used as a vehicle to transfer value more and more. That use case is actually going down. In this video, we are going to look at a lot of different charts that describe what Bitcoin is actually doing under the hood. We're going to look at how many wallets are there that hold a certain amount of Bitcoin. We're going to look at this deceptive spike in number of transactions, what this actually has been caused by. We're going to look at true fundamentals, things that can only be seen by looking at the blockchain, by looking at those individual transactions, things that you cannot analyze in traditional finance. So this is not just a random video looking at price curves and drawing lines and things like this. We are looking at the statistics that few people actually look at. So let's start off with this transactions on the Bitcoin network, a 7-day moving average since 2009. And it looks like this peaked somewhat in 2018 at 400,000 transactions per day. That's also when the price of Bitcoin peaked at 20K. Afterwards, the price went down by more than 80%. And since then, the number of transactions flatlined, or rather went down, with a very steep spike recently, where the daily transactions went to almost 600K. Now, the reason for this is Bitcoin ordinals. There are all kinds of ordinals. It's basically NFTs on the Bitcoin chain. And there was quite a bit of hype around this, but it seems like it's dying down. It looks like this was a technology fad. A lot of fees had been paid in May and April. This is when the attention was at its height. And now very few people are still interested in ordinals. And so I wouldn't be surprised to see the number of transactions on the Bitcoin network again normalizing in that 300K range. There's really no growth in on-chain transactions on Bitcoin for roughly 5 to 6 years. Bitcoin as a transfer layer, as a payment layer, isn't growing if you exclude the Lightning Network. You just look on-chain, no Lightning Network. There is not more activity. But on the other hand, we did see the price increase. That's quite interesting, right? We peaked pretty much, if you exclude the ordinals, we peaked in the number of transactions in 2018, but the price since then went up at least another 50% if we look at today, or if we look at the all-time high, another 260%. So price up, activity not up. And we can also see this in the number of active addresses. No growth since 2018. Interesting, right? We see the spike in the number of transactions because of the ordinals. We don't see that spike in the number of active wallets. So that's the active wallets. Here we've got the new wallets. See how those charts look very, very similar. The active wallets and the new wallets. What does this tell us? Why don't those charts look any different? It tells us that new people that get into the space are not active for very long. You become a new user, you use it once, you use it twice, but you don't keep on transacting back and forth. Now, with any other technology, this would be a huge red flag. You want the active users to grow over time, and the new users, the number of new users can be somewhat stable. The active users, they should be growing because the adoption, the usage of the platform should continue by the people that onboard. Why don't we see this in those charts? Why isn't the active address chart growing more steadily than the new address chart? And why is Bitcoin's on-chain volume, as in how many dollars are being transferred every day, why is this crashing so much? It's because Bitcoin is now a store of value. People buy Bitcoin, but they don't move it. Bitcoin is rarely used to pay somebody else. Bitcoin is mainly used to simply just allocate capital, keep it, protect against inflation, protect against government overreach. It's not being used to pay your friends when you split the bill at the restaurant. So that is to some degree against Satoshi's initial vision, right, of Bitcoin being a peer-to-peer payment network. Bitcoin rather seems to be now a decentralized store of value network. Here's another chart that strongly supports this argument. This is the number of Bitcoin addresses that hold at least one Bitcoin. Here, addresses with one Bitcoin, that's the orange line. And see how constantly over the years this is increasing. And it's increasing despite the Bitcoin price going up. One might think maybe this should decelerate because now you need way more capital to own one Bitcoin. But the exact opposite is happening. This is simply just continuing to grow. And the reductions in this curve are very minor. Now more than 1 million addresses hold at least one Bitcoin. We've crossed the 1 million mark. So the kind of adoption we see is not transacting on the network. It's not moving value back and forth. It's storing value. More than 70% of Bitcoin have not moved in the last 12 months. So Bitcoin simply just became another asset class, a somewhat uncorrelated asset class to stocks, to property, to precious metals. It's another part in a well-mixed, diversified portfolio. Now here's a chart that's really worth some reflection. This is the Bitcoin miner revenue daily, a 7-day moving average, denominated in dollars. And have a look how this did generate a new all-time high in the middle of 2021. But it only went up maybe by 50% or so, right? Those two peaks, it's maybe 50 million versus 75 million or even 70 million or so, right? 40% growth. The price, though, it grew more than 40%. It more than 3x'd, right? A gain of more than 200%. Now that's fundamentally a problem. The reason for this, of course, is on the one hand, the Bitcoin halvening. So the newly issued Bitcoin gets cut in half every 4 years. The inflation of Bitcoin is coming down. But on the other side, we also don't see so many transactions happening, meaning that most of the revenue of the miners is subsidy and not gas fee. So that means that the Bitcoin price is outgrowing the revenue of the miners. Less and less money is securing the Bitcoin network, relatively speaking. So Bitcoin 10x's, but the miners, they might only get 3 times as much revenue. The fraction of capital that's being expended or that's being moved to the miners as a reward, it's smaller and smaller relative to the market cap of Bitcoin. That's a potential security concern, right? When it's small enough, then it doesn't take that much capital to make a 50% attack, to buy enough computing power in order to rearrange the blockchain, to overrule everything. And that's why there is the Bitcoin tail emission debate. The Bitcoin tail emissions debate, it's the discussion whether or not it makes sense to get rid of the 21 million cap for Bitcoin, to potentially allow for more Bitcoin issuance if the miners don't get incentivized enough to secure the blockchain. That's a potential point of concern that has to be addressed at some point, because on the one hand, you've got the $21 million cap as a strong, unique selling point of Bitcoin, right? That's what makes it so hard as a type of money. But on the other hand, you want the Bitcoin network to be safe. You want the miners to be compensated adequately. It's an open debate, and I hope it gets solved in a way that the cap will not increase, but that maybe rather the fees increase, and that there's more of a push to getting the smaller transactions being moved to the Lightning Network. Here's an interesting top indicator, the average transaction fee on Bitcoin, when this tends to spike and the price also tends to be very high. So in 2018, we had a spike, $50 per average transaction. In the second half of 2021, we also had a similar spike, and look at the price during those times. This is the first spike. The price peaked, as did the transaction cost. And here's the second price peak that coincided with this transaction peak over here. The recent peak was simply just the ordinals craze, so it doesn't make sense to analyze why transaction fees are actually going up. Is this because more people enter the space and everybody just wants to buy quickly? Or is this because of new technology that might be using up a lot of space on the blockchain? Let's have a look at how decentralized Bitcoin is. How many addresses are there that hold at least $1,000 worth of Bitcoin? Currently, that's 7.5 million addresses. For $10,000, it's around 2.2 million. For $100,000, it's maybe 350,000 wallets. For $1 million, we seem to have a bit of a data glitch here. but it's around 70,000 wallets, and for 10 million, it's around 6,000 wallets. So if you've got 10 million worth of Bitcoin in your wallet, you're among the top 6,000 holders of Bitcoin. You're pretty much a whale at this point. Now these numbers here, they fluctuate quite a bit, right? And that's because the price of Bitcoin fluctuates. But as shown before, if we look at this denominated in Bitcoin, then the volatility is way lower. Then the adoption is very, very constant. So will Bitcoin become the next payment network? It's very hard to say. There seems to be not too much progress in the last 5 years, but as a savings vehicle, as another asset class to store wealth, to protect against inflation, to protect against government overreach, we do see continued very constant growth. People are okay to hold Bitcoin despite its massive volatility, despite it sometimes going down 70 or 80%. If you've got Telegram, feel free to join us. Simply search for Bitcoin Strategy Channel within the Telegram app. You can also click the link down below. I hang around there regularly, looking forward to chatting with you. Bye bye.